Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, November 20th, 2020. Please don't forget to hit the like button, subscribe to this channel, and share this video with others. So we'll look at stocks today. They're trading near records. Nothing really matters apparently to stocks, not COVID, not election shenanigans. Small caps are leading the advance, and this is showing broad participation in the stock market. Look at United Kingdom as it is dragging relative to other countries. And we'll look at NeoTrade. I actually wasn't NeoTrade, I got out, but if you didn't get out, then congratulations. That's a 1200% move. All right, and then we'll look at the bond future. I'll project my indicators into the future, into the inauguration date, and we'll see where this is all going. And dollar is trying to bottom. Maybe we'll look at gold. Maybe gold is about to collapse. That's a possibility as well. And I'll show you three just total jackpot trades: Bitcoin, Ethereum, and Ripple. And yeah, they look great. All right, so as always, I will be using my price action indicators, so you can see them on this chart as green, blue, red, and yellow lines. To find out more about these lines and how you can have them on your chart, and also you will have great profits, I think, and also you will have just easier life if you just put this on your chart, and then you'll have very little problems with trading. So go to Master Charts Trading. You can also go to everyonecantrade.com and sign up. Okay, that's all the advertising I'll do. At the end of the presentation, I'll show you also where to go. So going right to the stock market, this is S&P 500. As always, on a daily time frame, I try to avoid trading on anything but the daily time frame. It's not always possible, but you know, this is S&P 500 futures, and here we can see several interesting facts. So let me go back a little bit first. So number one, these indicators are calculated. They are not, I didn't draw them in. So people were asking me, did your indicators get you out before the crash? Yes. So I got out here on the 24th, 25th of February, right there. My previous alert, you know, where I got in, was way back in February 2019. So you can see my trades are swing in nature. They're taking quite a bit of time. But as I keep saying, generally speaking, the longer you hold the stocks, the better. This is a stock future, so we should hold them for longer. So let's say we just did nothing and we kind of got in here on February 5th, 2019. And we just sat in the position and we got really nice gain. Finally here, this is our exit alert right there, 24th of February. And that's what we did. We got out. The collapse did happen here back in March. As you could probably recall, there was really just horrendous fear. Until eventually they started to buy, the Federal Reserve came in, started buying and just printing money and doing whatever they're doing. But the fact of the matter is that they did kind of just fill this crater with cash. And even though here where I'm hovering 27th of March, it was an opportunity to sell short the index, we did not do it. I looked at this chart and I just did not feel like that, you know, it was sufficient to sell it, to short it. So we did really nothing until a few weeks later, right there where I'm hovering, on April 29th, there was a breakout. And I keep saying the same thing, you know, people overanalyze stuff. People, you know, look at various personalities on TV and, you know, people who wear suit and tie, and they look really, I don't know, impressive, but they don't really impress me because vast majority of the time they have no clue what they're talking about. If you look at their performance, it's horrendous. Yeah, maybe they went to school for many years. Maybe they become this registered investment advisors and whatnot. But the fact of the matter is their performance is terrible. They charge a lot of money. They confuse the heck out of people because they have their own recommendations and they have their own, I don't know, egos to protect, I guess. I have very little ego because I'm a trader, and I am wrong constantly. I am wrong 30% of the time. So out of 100 trades, 30 times I'm wrong. Yet I still make $3 for each dollar I lose. So this is a very nice profit factor. So profit factor is calculated by dividing the number of dollars you lose by the number of dollars you win by the number of dollars you lose. So I make $3 for each dollar I lose. So I'm very satisfied with my performance. So here back on April 29th, that's the information I needed. I didn't need to go to a new school. I didn't need to go on TV and look for some personalities. I simply looked at this chart, and this is all I needed to know. You can do the same thing. And we just sat in a position. There was another opportunity on the 18th of May, and it just went in our favor, like it does quite often. About 70% of the time this happens, maybe even more. And, we're basically sitting in our positions. And right this instant, we're trading next to all-time record highs. Why? Why is this happening? This is a question in everybody's mind, because if I open the news, there is just nothing but doom. And, there is also this term called doom scrolling. So I do it all the time. I sit in there and wow, how bad can things get before, something really bad happens. And stock market just doesn't give a damn. It just keeps going higher. So perhaps it's the reason because, central banks from around the world are extremely accommodating. Basically, they're printing money and giving it away. Do we care? Not particularly, because if you're a fundamental analyst and back here in April, did you really, think that fundamental analysts here said, okay, we're going to be buying the stock market? No, they probably thought about a million other fundamental analytical things and did their own thing. Here I was pretty intent. We need to be buying here. We do not need to go around and, ask ourselves, should we be buying? No, we should be definitely buying. This is the intention behind this move, I guess. And this is the intention behind the trading and the trader's personality as well. So we need to have some sort of a decision-making process. And my decision-making process is that, once I see a close above the blue line, you don't need to know the calculation of the lines, but you can use them to your advantage. So this is what I do, and it's been working very well, for the past, more than 6 years already. I've been trading pretty much exclusively with this indicator. So we're trading near the records, the news notwithstanding. Can we get a pullback? Sure, but this looks like a cup and handle pattern, if anything. This is a cup and maybe this is a handle or a W kind of pattern. This is a bullish continuation pattern. We can see a significant move higher. I'm projecting at least 4,000. I don't know when, but 4,000 before we see any kind of pullback. NASDAQ is doing pretty much the same thing. We did the exact same thing. We did not do anything different. There's the opportunity back in April of this year. 14th of April alert was sent to my subscribers. This is an over 40% gain, and this is over 40% gain on a an ETF, and ETFs, are composed of many stocks. So individual shares within this ETF gained even more. Again, I didn't really know anything about this. All I needed to know is that it closed above the blue line. And the cool thing is you can do the same thing. Right this instant, this is IWM, so this is Russell 2000. This is a conglomerate of 2,000 stocks in one exchange-traded fund. So multiple alerts you can see here back in May, June. They were underperforming because you can kind of see that S&P and NASDAQ broke out in April, while the small caps actually waited until May to break out. That didn't really mean much. Correlations between the various stock funds is very high. So I, pretty much the same thing. I was like, okay, this is an opportunity. We need to be buying here. So we're buying. Latest opportunity was just tremendous. I mean, look, and the way it worked was just awesome. Look at this. Came right down exactly towards my indicator lines. So another thing is, I keep saying that we need to be waiting for the stock to come to us, for the price to come to us. We don't want to be chasing it. So let's say here back in June, you're like, oh, I missed the entrance. Shouldn't I be entering here? No, why bother? There's so many opportunities. Wait for the price to come to you. And we were very much rewarded for waiting. This is a 24% move in our favor. If you trade options, this is at least 3 times. So we're looking at least 75% move for an option. So congratulations. And the nice thing right now is that it is leading the market higher. So small caps are leading the market higher. It is showing broad participation in this advance. What does it mean? Does it mean the virus will go away? Or does it mean market participants are forecasting some sort of stability in the United States? We have no idea. I'm just looking at this particular security. It could be called something else, like this IWM. This could be a different symbol here. But I would judge it and I would trade it in exactly the same way. And I already showed this example. This is EWU. Before I showed this example in previous videos. EWU is United Kingdom. So, with all the Brexit nonsense and all that. Anyways, politics is just wild. I try not to get into it, but sometimes it's hilarious. And this is the fundamental analyst point of view. Right there, 12th of August, economic output in the United Kingdom shrank by 20%. The reaction was quite muted, as you can see. Not much has happened. Then you can see a sharp rally. Now we're actually, right this instant, we're approaching the breakout level. So very close. A close about 28.76. We could see a substantial move higher for Great Britain. Once again, this is not making any sense, because how can the stock market go up if the economic output is decreasing? Fundamental analysts, can you make a comment? And maybe try to explain it to me. All right, and I wanted to revisit the trade. This is NIO, N-I-O. I think it's a car company, but once again, I don't really care what it is. And I just wanted to show you how I think, how I look at, how I judge the company, how I judge the stock. So back here in April, I'm looking at the stock, and it came up on our scanner, stock scanner. It looks cool. I like this narrow trading range here. So the distance between the green and the yellow line is relatively tight versus, you can see how far apart they were just a few months ago. Okay, this is very interesting. This means that there's less risk. When I buy here, let's say I buy here in May, my stop would be at the yellow line. But let's say the same thing happened and the stock closed above the blue line here in February. The distance to my stop would have been substantially longer, bigger. So the risk would have been bigger here. But in April, May, the risk was quite small. So I'm looking at the stock and it looks great. And then finally, right there on the 27th of May, again, I don't know what happened. I'm sure there is, if you find a fundamental analyst, you'll say that, oh, well, I don't know, they had a contract and finally the contract went through, or maybe they had earnings and something like that happened. Maybe. But do I need that? No, I don't. So I went ahead and I bought options here. I bought calls on the 27th of May, and it just skyrocketed. And I'm like, okay, cool, I'll sell a quarter here. I mean, I don't know what the company does even. I still have a vague idea. And once again, I'm proud of it. You should not be worried about what the company does. You should be worried at how the chart looks. See the difference? And yeah, I started selling. I sold a quarter here. I'm sitting in a position again. I sold another quarter a few weeks later. It still just keeps going. It just explodes higher. I sold another quarter. I'm like, okay, fine. I'm gonna sit in a position. And then finally, I'm like, okay, this is good enough. I'm gonna be out of here. Now, clearly, I was way too early because you can see that it just exploded. It just keeps going. It still keeps going. So this is, let's say I kept it open from May. That's 1200% gain. And I actually would have still kept it open because my stop would have been at the blue line still. So the reason why I give it quite a bit of room to fluctuate is because I don't want to get stepped out. But I do want to, capture as much of the move as possible. And in this case, it seems to be just going and going and going. So this Neo trade, I mean, it was a blockbuster for me back already in May, in July, because, for me, overall profit was 400%. Let's say I kept my, if I kept my options open, my God, this would have been just a home run trade. But it was already a home run trade. This was just out of the park. But what I'm trying to tell you is you don't need to be some super cool analyst, finding some sort of information about acquisitions or about management shakeups or about earnings. These companies sometimes don't have any earnings. In fact, they lose money quite often. So how would you judge a company then? Well, then there's other ways to judge, but don't bother. See, seriously, look how easy it is. My decision making was about 3 seconds. There. That was all the decision I needed to do right there. On 27th of May, it closed above my blue line, and this is all I needed to know. So this is how I kind of make decisions about trading, and I think you should be considering doing something of similar nature. Right, so this is TLT Treasuries, Treasury bonds. I actually have a position here in Treasury bonds I bought on the September 10th here. And you can see it's not doing great. It's approaching, again, where I bought it. Hopefully it'll go in my favor. But what I really wanted to show you guys is I wanted to show you TYX, which is, this is Treasury bonds, long-dated Treasury bonds, and I want to show you Treasury bond yield. So it's the opposite. The yield and bonds move in the opposite directions. And right this instant, Treasury bond yield has been in a downtrend for a while, for at least since January of 2019. Here you can see downtrend in security. We were trading the opposite. We were buying the bonds. We were holding the treasury bonds. So we were able to capture vast majority of this move. Now, so we're in the current situation. You can see that the bond yield was approaching this breakout level, and this breakout level is 1.81. Very close here on 9th and 10th of November, we came within striking distance of a breakout. That would imply that the bull market in bonds is over. Okay, so right now we are seeing a pullback towards downtrending line. So this is red line is where I would short it again, the yield. In other words, I would be buying the bonds. Now I have a nifty thing. What I did is I'm projecting my indicators into the future. Now future is always fuzzy. We can't really know for sure, obviously, which way things will turn, but as things stand right now, today is November 20th, and I'm projected into the future, and here's my, here is the inauguration date, which is January 20th of 2021. So it's in not that far away. So on this chart, what I really want you to pay attention to is the way the indicators curve down. In other words, the yield, the indicators are curving down, and it is becoming easier for the price to break out above it. So as I mentioned before, when the yield breaks out into the bull market, it would be a bear market for bonds. And if you are reading the news, you may have heard that, for example, Bill Ackman has placed a bearish bet on bonds. So perhaps he is seeing something of similar nature. If the yield breaks out above the blue line sometime in the not so distant future, and the way the indicators are curving, it's making it easier to break out. So if it breaks out, then I will sell my treasuries position, TLT. So I'll sell my TLT position, because by then most likely the price would have been below the red line already. So what's happening? Is the bond market, the bull run for bonds coming to an end? Entirely possible. So we need to keep our minds open to the possibility of a bearish outcome for bonds. In that case, Bill Ackman will be correct. Right this instant, I'm still not 100% where this is going, and I don't want to make a decision based on the projection, because the projection in the future is always fuzzy. Like I said, future is always, I think they call it, future is penciled in. So if or when we see a breakout above the blue line, I will close my treasuries position, and potentially maybe I'll buy puts on TLT. But until then, I'm not gonna do too much. But this is just, I'm putting it out there for you guys to kind of see another point of view and see how I think. I don't think fundamentals at all. I look at technicals 100%, and it's been working wonderful for me. So something for you just to consider. All right, let's switch gears. Let's look at the dollar and gold interplay. So this is DXY, dollar currency index, on daily time frame. So daily time frame, no question about it. We saw that dollar was in a downtrend. We were playing some forex. I don't really trade that much forex, but this is kind of also, you can't really buy DXY or sell DXY in the United States. So it's more for informational purposes, but if you're outside the United States, then you can trade this as well. So no question about it, dollar was in a downtrend. So now we're trading very close to September lows, where I'm hovering. So we're getting really close to those lows. And now I'm having doubts. Is dollar going to continue lower, or are we going to break higher? So looking at gold on daily time frame, this is again daily time frame, gold futures, and I think I already showed this chart. I showed this enormous red candle on the 9th of November. It is truly huge because it basically negated like month of progress for gold. And these types of candles, they don't just go away. So there's a good chance we may see the same move duplicated to the downside. And if that happens, we will see a gold approach bear market levels. Again, bear market levels for gold is 1689. At that point, if I had any gold positions, probably including gold miners, I would exit. But I wanted to show you this same charts. So here's DXY, dollar currency index, on 4-hour charts. On the 4-hour charts, dollar came down. So here, this is that same period on the 9th of November. If I go to gold, you can see this candle is, I mean, it's huge. Look at the size of this candle. So let's say you were, trying buying it here back in October, and then in literally 1 hour, this is a 4-hour candle, so in like 4 hours, everything was just wiped out. So these types of candles don't just happen for no good reason. So here on the 9th of November candle, I'm going to go back to dollar. That's the same candle. Look how small it is. It's not significant. And look how huge a collapse was for the gold. So on the 4-hour chart, again, this is a 4-hour chart. So each candlestick is 4 hours worth of activity. On the 4-hour chart, we can see a pullback from the lows on November 9th towards the red line. You can see it exactly tapped here and then collapsed lower. So if you shorted it, let's say here in 13th, 15th of November, where I'm hovering, you would have been already in profit. So this is gold. Dollar also pulled back. So just from the interplay going back and forth, between gold and dollar, I am very reluctant to buy gold. You know that I trade gold. I like gold shares. I'm not a gold bug by any means. I'm not a bug for anything. It's like I don't really keep any of my stocks for very long. I trade in and out. So this is why I'm so concerned about gold. Is I think dollar could be bottoming, and if dollar bottoms and rallies here, and even if it rallies a little bit, just like towards maybe 95 levels, gold will come under severe pressure, because look how vulnerable it was from just a small move here on the 9th of November. If we if we look at 9th of November candle for dollar, it was inexistent. It's like tiny. This is where I'm hovering. Yet gold had a humongous candle. So I don't know. I don't like this chart. I want to be very, very, very cautious right now with gold and gold shares, and I'm telling this to my subscribers as well. So I am very cautious with gold right now. We could see a significant move lower, especially if dollar gains even a little bit. It's just not a lot for dollar to gain for gold to break this support at 1849. If 1849 is broken, could easily see a trip down to the bear market levels. Again, bear market for gold is 1689. And let's get to the cryptocurrencies. So cryptos were just on fire. I need to update this. This is Bitcoin with a 122% gain from the previous alert. So previous alerts and the breakout occurred here on 29th of April, where I'm hovering. Again, with Bitcoin, it's how are you going to analyze Bitcoin? I don't know, supply demand of Bitcoin or some other ridiculous thing. You don't need any of that because it's clearly on the chart. Look where I'm hovering. 29th of April is the initial breakout. Then you had a couple of opportunities. I sent alerts to my subscribers. I actually entered myself, but I unfortunately got stopped out. So I sometimes beat myself up, but what are you going to do? The nice thing is now we have many cryptocurrencies, and Bitcoin is just not the only game in town. So looking at Ethereum, for example, here's Ethereum. So I couldn't get into gold. I missed that move, but I got into Ethereum. So Ethereum, right there where I'm hovering, I bought at 344.84. A few weeks later, the price went towards my target. I sold a quarter, advanced my stop to entry. So at this point, I cannot lose. In fact, I already have a little bit of a gain because I already took profits and my stop is at entry. So anything happens, at least I have a small profit. And this is another thing that you need to really consider when you're trading is your psychology. Are you going to be able to handle these types of stress? Many people cannot handle this stress. And it's really unfortunate because they don't ask for help. So if you are my subscriber, you know I'm extremely available. You know that I answer questions very quickly. And this is one of the things I can constantly preach is that you need to reduce your stress in trading. You can do that by doing, several simple things. One thing is don't buy too big of a position. Buy an appropriate position for your account. And once again, I can teach you how to do it. It's super easy. And then once you buy that appropriate position, you still need to manage the trade. And this is a trade management. You know where you're buying, you know where you get your you go to target, then you advance your stop, and then you relax. So I relaxed at the point of 13th of October, then a few weeks later I sold another quarter because it went basically to highs, and I thought, maybe this is the large candle, how I'm gonna zoom in a little bit. This candle right there, 6th of November, I thought, okay, that's probably it. So I'm gonna sell another quarter. Obviously I was wrong. It's going still higher, but I still have a half a position left, so I'm very happy with what's happening. On the remainder of my position, I am 50% up. It's not uncommon for cryptocurrencies to move this much, but you gotta know what you're doing. And, risk control is super important. So I'm still holding Ethereum. Then a few weeks earlier, this is again for my subscribers, alert was sent. This is Ripple, XRP USD. Some sort of a crypto. I don't know what it does. I don't care really what's it, how it's made or, what I'm saying? Like, there is no reason to know how it works as long as you can make money from it. So alert was sent here on 26th of October. A few weeks later, right there on the 16th of November, our target was reached. Again, we're doing the same thing. We're advancing our stop to entry, and you can take profits. So, now you're 35% up, and it seems that we're gonna go higher from here. We're breaking. We already broke above previous highs. So Ripple looks great. Let me see if it's all-time highs. Not yet. So this is still approaching, still ways to go towards all-time highs. This is 52-week highs. But even 52-week highs are extremely bullish for any security. All right, so if that makes sense, I would head over to MasterChartsTrading.com. You can also go to everyonecantrade.com. Because truly everyone can trade and it's super easy. All you gotta do is just follow the directions. And directions are very easy. We buy and close above the blue line. So for example, for this NEO trade, this is NIO, we would have done the same thing, and at this point hopefully you would have kept the position open. That's a 1200% move. It went from $4 towards $50. So this is a type of trades in my newest Stock Speculator newsletter, right there where I'm hovering. So we have several products. You can just get the indicators, and the indicators are these 4 lines in the chart. Again, they're support, resistance. The calculation is hidden, but you get to use them. So there is no need for you to know the calculation so long as it works. It's sort of like a Coca-Cola recipe. Nobody really knows what it's made out of, but it tastes good. And it also sells really well, so it's the same thing. The newsletter contains many things. We trade ETFs, we trade various stocks, large cap stocks like Apple, Facebook. We trade ETFs like SPY, QQQ, TLT. We also trade Forex, commodities, gold, and cryptocurrencies. So like I already showed you several possibilities here. And stock speculators, so this is the type of stocks we're looking for, NIO. Let me see, I think there was another one, ATRX. Not ATRX, I'm sorry. It's last week I highlighted this one. This is Atara Biotherapeutics. Again, actually it went even higher now. 67% gain. This is the type of trades that we've been getting lately with our stock scanner. So stock scanner looks for these types of breakouts. It looks for breakouts above the blue line, and we just buy there. So this is the stock speculator and the stock screener, and they're included in the newsletter. Of course, I think the ultimate bundle is the best deal, because you can see the newsletter is at $50. The ultimate bundle is also at $50, but with ultimate bundle you actually get the trading indicators. Now I keep hearing from people that I'm way underselling the service, so there is a good chance this will at least double. So right now I think you should consider signing up before this goes up. I'm serious. This is getting very close to a significant price increase. So do sign up. All right. Any questions? Please make a comment below, or you can send a message, from my website here. All right. That's it for this week's recap. If you have any questions, please send them in. Thanks for watching. Have another great trading week. Bye bye.